Hi, this is Tim Yoder with Fit Small Business. Today I'm going to be evaluating Xero accounting software for the Fit Small Business case study. Today we'll be looking at Chapter 5, which is our fixed assets and long-term debt. So Xero is actually fairly unique in bookkeeping software in that it has a fixed asset manager built into it. So let's go to that fixed asset manager by going to business, or maybe it's accounting. Yeah, here we go. And then fixed assets. So fixed asset manager generally keeps track of your fixed assets and depreciates them for you. Um, Oftentimes companies won't do this themselves. They'll have their accountant do it, like maybe their tax preparer do it at year end. But here Xero lets you do it yourself. Okay, so we have to, it looks like it tells us we have to choose a start date. So let's just choose the beginning of this year for our trial balance for our little sample company here. Okay, so up here it tells us we can import a list of assets. And so if this were real life, we'd want to do that because on our balance sheet, you do see that we have some fixed assets, some equipment and some vehicles. So we'd want to import those. We're not doing it for the case study though. Let's just add the one new asset that we're purchasing here. The case study tells us that we purchased a job trailer for $12,000 by borrowing $12,000 from Bank One. So let's try to do this. So let's add an asset. Job trailer is the name of our asset. So it's automatically assigning it asset number 1. That's fine. We'll go ahead and use the current date as the purchase date. And our purchase price is $12,000. So it looks like there is a warranty field. We can keep track of when the warranty will expire, the serial number. Now our asset type might be important. Well, maybe not if it's manually defined. We will just call it equipment. Okay, so this is neat. So this tells us which asset account do we want to keep this in. We're going to keep it in our computer and office equipment, and we're going to keep our accumulated depreciation into our accumulated depreciation account for that particular thing, and then depreciation expense. Let's see, do we have a depreciation? Yep. There we go. So it'll automatically, looks like it will automatically record our depreciation. Okay. Looks like we can take a book depreciation. We can define our book depreciation. Let's see. So our case study tells us let's do it as let's do it straight line for book purposes. We want straight line 5 years with a $2,000 salvage value. Depreciation method straight line. So full month or actual days. May as well do actual days if it lets us. We don't need to do a rate. Let's do an effective life instead of 5 years. Now the only thing it didn't allow us to do is put in a salvage value. Okay, so generally you like to, for book purposes, you want to use a salvage value. Okay. So class, let's say this is an HVAC for our HVAC crew in New York. Okay. And register. So I don't see, it's not telling us, it's not asking us how we bought it, like from which account do we take the money. So my guess is that this is setting it up as a fixed asset, but it's not actually recording the purchase. It's just setting it up to depreciate it, which is fine. Far more than what most bookkeeping software does. So let's click register. Okay, there we go. So let's run a depreciation schedule. Let's run it till the end of the year here. And it shows us that we will have a $355.07. Okay. Good. So how do we sell an asset? So if we click in here, what is this? Fixed assets. Let's go to settings. If we click in here, can we dispose of it? There's got to be a way to dispose of it here. Okay, so here we can tell it where we want things disposed of. So when we dispose of something, if it's a gain, it'll go to other income. We'll put other income, whether it's a capital gain or a regular gain. And a loss on disposal, I still want it to go to other income. I want all of the losses and gains and losses to appear in income rather than an expense account. So we can hit save. Okay, so the thing we can't figure out here is how to actually dispose of it. Maybe here, maybe it's in the registered assets. There we go. Now maybe if we click in here. Okay, so summary. Okay, very nice. So we can add note, value. Okay, nice options here, I bet. Dispose. Sales proceeds account. Okay. Good. So we're not going to record this, but let's say eventually we sell it for like $5,000. Looks like we can then show that sales proceeds. So when we sell it, it looks like we can actually record the transaction right here. Good. We can record the transaction right here, and that'll actually calculate the gain or loss on its own and record it in our statements. Excellent. That's actually really good. So I believe that the only thing that's really not happening here is that I don't think it's recording the actual purchase of it, even though we have it set up on our schedule, because it never asked us how we paid for it. So to check on this, let's go to our either our trial balance or our balance sheet. Let's go to our balance sheet. Let's do it as of today. Compare with, I don't know, like 4 days ago, I guess. I don't know. I just want to see if fixed assets changed. No. So that's what I thought. And again, really no problem. I don't mind that. So you can see the equipment stayed the same. So it didn't record the purchase. It just we're now depreciating it, which is great. But it didn't record the actual purchase, which is fine. So you have to do two things. You have to record the purchase, and then you have to actually add it to your fixed asset list so that it gets depreciated. However, it will record the depreciation automatically, and it will record the sale, the gain or loss when you sell it automatically. Okay, so that's great. So let's go ahead. We need to record the purchase on a note payable. So I think we're going to probably have to record that as a manual journal entry. Okay. Okay. So, record purchase of job trailer. And we'll just use today's date. Okay. So the account, we want to make it to that same account. Now, if we had purchased it for cash or something, we could just record it, in the same way we record other cash expenditures. The reason we're having to do it as a journal entry isn't because it's a fixed asset. It's because we're paying for it by taking out a loan. So this needs to be do we have a loan? Yeah, this needs to be, actually no, first we need to record the equipment. So we're going to debit equipment for $12,000. We really should put in our class and location. Yeah, it's got that same weird thing where you have to double click on this space in order to type something into it. So we paid for it with a note payable, so we're going to credit note payable. I guess maybe it was loan payable. There we go. Yeah, I'm having to double click there in order to type anything. Okay, so there we go. Let's post it. Okay, so the fixed asset part of this was really good. Let's go ahead and grade that. Record the job trailer as a fixed asset. Yes, so we had to do that with that journal entry we just did. But then we also did it within the fixed asset program so that we show it on a depreciation schedule. So view a list of fixed assets. Yes, we were able to do that. This was our only fixed asset. We could have imported other fixed assets if we wanted. Assign an ID number to the asset. Yes, it automatically assigned an ID number that we could have changed. Record the note payable as a long-term note payable. So that's the loan payable. We did do that. Set up the job trailer to depreciate. Can you set up separate depreciation for taxes? No. So the only thing you can do is your book depreciation. Print or view a depreciation schedule. Yes, we were able to calculate a depreciation schedule. Set up an amortization for the note payable. Okay. And we can record the sale of the fixed assets. Any other really mentionable other fixed asset options? I think that was pretty much it. Okay, so the note payable. I don't see anything special to set up a note payable amortization schedule, so it would be nice, but very few bookkeeping software will do that. Sometimes you have some niche industry ones that will. Oh, sorry, so these are zeros. We can't create an amortization schedule for the note payable. But anyway, so that's really good. I'm very happy with Xero. This is by far the best fixed asset accounting built into a bookkeeping, small business bookkeeping software that I've seen. So good for Xero. That is chapter 5 of the Fit Small Business case study for Xero.